Welcome in everyone to our last video here in our short-term rental loophole series. And I hope at this point you have watched through, hopefully I've been clear enough, you've understood how you can use the short-term rental loophole. Case uses, how you can use it once, or you can use it to build an entire portfolio. That's really what I want you to take away from this series. And in this last video, we are talking about audit proofing. And the key word in that is proof. So let's talk about that. Let's dive into this because this is something that you definitely want to be aware of. And you want to know it before you get into it, right? And you want to do all the kind of planning, contingency planning, and everything like that. So know that as you get into this. When my wife and I got married, I was put with the task of finding the DJ. And I probably talked to 10 to 15 people that I found, internet searches and things like that, finding the DJs. Most of these people were just fly by the seat type of guys. Yeah, they DJ'd, they did this. And then I interviewed a DJ. This DJ was probably in his early 40s. He was a full-time, worked for UPS and logistics of UPS. And I mean, by 5 minutes into it, he could have told me any price and I think we would have hired him at this point because what he showed me and how he presented stuff and how he did stuff was entirely different than anyone else I talked to. No one else would I have trusted. Like, hey, is everything going to go smooth? No. Basically, this guy went through his whole plan for the evening. He had me set up. He's like, this is what we're going to do. Here's how, when you're going to do your speeches, here's how we're going to coordinate everything. To this level is what he did. He said, you know what? Any important song that is going on, we have it playing simultaneously on, I think it was 3 different sets. So basically, if it cut out in the middle of the first dance, in the middle of the bride and father dance, you couldn't even notice a hiccup in it because that was backed up with another simultaneously playing type thing. So as he got into it, he's like, well, I'm like, how did you even get to this? He's like, well, I've been doing this for 20 some years since I was in college. But working for UPS, he's like, our big thing is contingency planning. He's like, it has to be what happens when plan A fails and we're on plan B. What happens when plan B fails and we're on plan C. So, same kind of like a Navy SEALs type thing is how his training was and how he was on this. So that was what he brought to his DJ type thing. And again, I'm sure we paid him probably 3-4 times what any of these other DJs were asking that were the young guys just wanting to do it or whatever. But it was well worth it because I knew we were covered. I had peace of mind in hiring him. And that's what I want you to understand here is when you're doing the short-term rental loophole, when you're doing anything that can be somewhat aggressive, it's only aggressive if you don't understand it and you're not documented and you're not ready, right? Because other than that, all you got to understand is, does doing the short-term rental loophole increase your audit risk? Most likely, right? If you've always just filed tax returns as a W-2 employee and paid the government 35% plus in tax, right? Well, they're happy. They're probably not going to come look at you because honestly, it all runs through the computer, right? They can document that all quickly. No one has to touch it. Now you're going to file a return saying, hey, by the way, I did this thing and I want $40,000 back. Well, the computer system might be like, whoa, hold on, someone needs to look at this, right? And then they might look at it. And then do they understand it? Maybe, maybe not. Do they need more documentation? Maybe, maybe not. Okay, let's look at this, right? So, I tell people that I'm like, it is going to raise your risk of audit, but you do it right. It's not going to raise your risk you lose it all, right? And that's what we want for our clients. And that's who you should be working. You want your accountant to understand this and you want to be comfortable that they understand this. And they're at a level where if you get audited, they can back you up and they can support you. And they have put you in a place to have the documentation and the information ready for that audit. So that's what we're going to talk about in this last video here. Make sure you follow through with that and you have this documentation. I'm telling you, this is the key to doing it. You definitely want to have this up front. It helps you sleep at night. Auditor comes and sits with you. You bring all this to them. It's going to should be a no change audit in maybe 2 to 3 weeks, right? Versus a long, prolonged thing. They disallow stuff, definitely. So, you can pay the government the most tax you want your whole life and not be at risk. If you want to do that, don't do the short-term rental loophole because doing it, you're changing things up. You're doing something. It's legal. It's written into the code. You can dive into it. There's code sections on it. You can document it. You can show it to the IRS. You can show it to the tax court. So you are legitimate, but you need to make sure you've met it and that you have your documentation to prove it. So what documentation are they going to look for? Is the IRS or the state going to look for? What are they going to ask you for? Well, first, they're going to want to see proof that you materially participated. You need your logs. So you need that log. That's the first thing they're going to ask for. I promise you they will ask for your log. They're going to ask for your log of your hours. Hey, make sure those hours are solid. Make sure if you forgot that, go back to I think video number 2 in this series where we talk about material participation, what qualifies and how to log those hours, right? Grab that material participation Excel sheet. Make sure you're doing that. Put an accountability thing on it. Do it weekly, but definitely do it. You can do it in arrears. It's going to be very hard. Do it as you go. Just keep up with it. Time block it. Whatever system you have, fill out that log. That's the first thing and you will be happy you did. They're also going to look for logs of other people that worked on the property. So when you use a contractor to do something, have them sign off on how much time time he did. So final invoice to say, yeah, that took me 20 hours, whatever, and sign it off. That's all they're going to ask for. Who else worked on it? Well, this guy, he fixed the bathroom, he fixed the basement type of thing. So anyone else who put any material time to it. Property management company, ask them for reports. Say, hey, I just want to see at the year end or month by month, how much is each person working? Can you give me that report? Again, if you don't have one that's willing to do that or that's doing that, let me know. We have some really good short-term rental property management companies who I know can do this and I know can work with you along the way. You may be watching this video coming from one of those good property managers. So definitely you can get those reports from them and see where they're at, because that's what they're going to ask. They're going to ask for your logs and anyone else who worked on the property. If you're trying to meet the 100 and more than anyone else, if you meet 500, they're still going to ask for it, but you're good. You're golden. You met 500 hours. So make sure you've kept your logs. Remember, spouses can go on the same. Remember the type of hours they like on there and keep those logs. That's the first thing they're going to ask for. Proof you materially participated, which is your log. Next thing they're going to ask for is proof of the date in service. So what date did that property become available for rent? Pretty straight. You get it on Airbnb, wherever you get it marketed, you'll pull the report from them. Airbnb can send you an email, Verbo, they can get you the documentation. Yep, it was up on October 1st, property was up. Like you can get that, and also you can see when your first stay was, right? So that's the next thing they're gonna ask for is, well, what day was it available? Because you could have had this property and it not even been available all year. You still renovated it at the year end and can't put it in service into next year. So they're gonna look for proof that was available for rent. Then they're gonna look for proof that it qualified as a short-term rental. So what do you need? You need average stays of less than 7 days. It needs to be stayed in. Someone needs to pay you fair market value, right? So that's what they're going to look for is, hey, was this stayed in over half or on an average of less than 7 days, right? So pull your Airbnb reports, pull your property management reports, wherever it's listed. They'll look at all those dates, figure out, okay, what was the average? So make sure that it's stayed in 7 days or less on average and that you have logs of that. Now, also a good rule of thumb is to document any personal days that you stayed there. Kind of a one-off, but they will ask for that. They'll say, well, did you stay there at all personally? So if you do stay there personally and it's a non-working days, definitely tell them about that. Be like, yep, here I had 6 days stayed personally, because that's what they're looking for. Did he stay more than 14 days there personally? So make sure that you've met that. You haven't fallen for that pitfall, which we talked about in our last video on potential pitfalls to avoid. So they will ask for that if you do stay there any personal days as well. Then they're going to want proof of all your expenses and your fixed assets. So the dreaded receipts, right? That's what they're going to ask for. Now, if it's fixed assets, if it's, you did renovations of $30,000, those invoices they're going to want to see. Make sure you keep those invoices. If you did that yourself, keep those. They can be electronic. So scan them in, create a system, and use your accountant's portal, put them up there, but save them somewhere and have those as backup so that you can give them your folder. You can print them all out and give them to them and say, here's all my invoices. You can upload them and send them and let them print them out, but they're going to ask for those. They are going to ask for, a general ledger and expenses and things like that as well. So make sure you have a good system. So when you're going and if you're doing it yourself and you're putting together, okay, here's what I spent, document that. You're going to need to do that anyways, but use your Excel list, use whatever calculator. If you're using QuickBooks, use that system. If your accountant's doing it, they should have that backup and everything that you need, but definitely use that. As far as the receipts go on expenses, they're going to go through, that general ledger and some of your expenses. They might pick them out. If they're big, unusual, odd, they might ask for them. If you have $2,000 in a dinner one night, maybe they're going to ask for that receipt. If you have $20,000 of travel or education, they're going to start to look for that. They're looking for things they can disallow. They're looking for things that you didn't have documentation on or that weren't ordinary and necessary for your business. So they're not going to look for every $5 coffee receipt, but they are going to pick out big, unusual ones. So on those, keep your receipts, keep good documentation, talk to your accountant about, what you need on that documentation and a system for it, but definitely keep that. But what they're really going to look for is the big things, the fixed assets, the big repairs, the big renovations. You should be keeping those invoices anyways, somewhere filed. Accountant may need them, or they should need them when they're setting up fixed assets and stuff. So definitely keep those anyways. The more documentation, the better on that. And then the last piece they're going to ask for is a qualified cost segregation report. So if you did this just willy-nilly and you're like, I just broke off my own numbers, it's not going to fly. Use a qualified engineering company, right? So that's what you need to do. Have it, go find that company, vet them, make sure they're good. What happens if you get audited? Or like what we do, work with your accountant who already works with other engineering companies and has it kind of in-house. So that's what you need to do, is make sure that cost segregation report is good. It's solid, because they are going to ask for that report. But you've done those things and you've basically proved everything. You have proved you materially participated. You have proved when it was in service that it's a short term, that you didn't stay there. All your expenses and your rehabs and renovations and how you got the bonus depreciation. And that was everything you did for the short-term rental loophole. That's all they need to see, right? That's what they're going to see. Spend a couple weeks on that audit if it goes under audit, and they're going to do a no change. Now, how do I know this? We've gone through short-term rental audits with clients. So went through 3 in 2024 on 2024 returns, all came back with no changes. right? Now, I would also talk to your accountants about, what happens in the event of an audit? Am I covered by this? Do whatever? Because like in ours, we put that in package offerings to clients, but a lot of times they don't go with that package offering. So if they go under an audit for something, they're going to have to re-engage us to defend them in that audit. And so just know what you're getting and what that is and where they're coming in at. It will definitely be worth it to have your accountant there doing it, because the auditor is going to do an initial questionnaire with you, and you will want your accountant in that initial questionnaire, I promise you, unless you are super sophisticated on what you need to be doing, because they're going to ask questions that are leading questions, and we can pick up on that. I can be like, this is what they're trying to get to. Like, no, he didn't. I can fill you in. So you definitely will want your accountant supporting you on that audit, which leads me into probably the most, other than documentation, this is key as well. And this is key, especially when it comes to audit proofing. Any accountant can report this, can put this on, can do whatever. They can get you tax savings on your tax return. I see that all the time. Doesn't mean it's right. Doesn't mean they're going to back you up. Doesn't mean they know what they were doing or that it's done correctly. So work with an accountant, work with a CPA, work with a firm who knows what they're doing, who you can trust, knows what they're doing. Probably has other real estate clients, probably has other short-term rental clients, probably has been through audits with those real estate clients and short-term clients and knows the differences and knows grouping elections and knows how to report cost segregations, knows how to do accounting method changes that come along with it, right? That's who you need to be working with. If you're their only real estate client, it might be great that you're paying them a few $100s for a tax return. You are at significant risk. Even if they get you the tax planning and the tax reduction, if it's not done right, you're going to be the one on the hook for it most likely. So make sure you're working with a good accountant first and foremost on that. Make sure you're working with a good short-term rental expert, property manager, if you are working with a property manager. So make sure they know what's going on, that they're well-versed on it. You want a whole team on this. Make sure you're working with good attorneys, right? So setting your LLCs up, protecting yourself, that is key to this, and not putting it in the wrong legal entity setup or the wrong taxable entity setup. So make sure you're working with good attorneys, especially on short-term rentals. Guys, there is a lot of liability that can come there. You got different people in there all the time. Even those contracts with Airbnb, Vrbo, like they protect you to an extent, but you want to get yourself personally protected on this thing 100%. So work with a good attorney on that setup. Guys, we have tons of people in our network who can help with this too. So reach out to me, connect with me if you're like, hey, I just need a good attorney to help me set this up. You don't have to be a client. You don't have to use us for anything, but make sure you are working, and we'll gladly pass along good qualified attorney, short-term rental manager, financial advisors, and also a great person to make sure you are telling what you're doing on this. Tell them, the full plan. Tell them, hey, we're doing this year 1. This is the goal year 2, year 3, year 4. I usually tell people the best financial advisors are the no guys. They're the guys that are like, yeah, I don't know. I don't love it. There's some risk there. It's real estate. Great. I'm going to still do it. But they're at least telling you, okay, here's the pitfalls. Here's watch out for. Here's it's getting risky. Then you can make the call, right? If you have a team full of yes guys, if you have a team full of me and every rah-rah like real estate guys, you want someone to keep that in check, right? Now on the flip side, take that with a grain of salt. Work with a financial advisor that you truly trust as a fiduciary for you, that has your best plan in mind, that's not telling you, yeah, don't do this, because at a short-term rental, there's no way for them to directly bill for it a lot of times, right? So you want to make sure you tell them, hey, this is what I'm doing. You're working with someone who builds that into your financial plan and who watches your back, who's like, you know what, it's great. I know you love this short-term thing. You want to buy 5 this year? Yeah, they're stretching it, man. Like this is like, let's make sure we're getting money into the Roth. We're getting money over here too. Like that's really what you want on your team, is a good financial advisor who's good with your real estate investments, who understands the full picture and the full plan and where you're trying to go, who you have to override at times. Same with your accountant. Like you might have to override them on stuff, but be like, you know what, I'm going to do it. For us, I'm like, I can be as aggressive as you are documented. I can, if you're good at record keeping, if you're detailed, that increases what we can do a ton, because now I'm audit proofed, right? So those are some of the key people to have on your team: attorney, financial advisor, short-term rental. And I think at the top is that accountant. The only other one I think I forgot to mention maybe was the good engineering firm. So if your accountant's not bringing that person in directly, make sure you vet and find a good cost segregation expert and firm, and one that you trust and understand what they're going to do to back up those reports. We work with them directly, so we usually get them kind of directly to our clients. Our clients don't even see them a lot of the time. So make sure you understand what that report's going to look like and have an idea of that. But yeah, those are the big keys, guys. Have a great team in place, have your documentation down, and then go for it, right? Because that, again, all legal, you're good. Short-term rental loophole, you should now understand it, understand how to use it. I think you've probably picked up on a lot of other things you can use for business as well in this and rental portfolio building, but hopefully it has all been good. You feel comfortable, you can do it, you can sleep at night with your audit proof. Reach out if you need connections, if you have questions, if you're in the market for a cost segregation study, reach out. We have options and availability for that. If you're interested in becoming a client of ours, a full-time first-time tax planning client, reach out. We can talk about that. If we have capacity, we can bring you on. We go through phases where we do and we don't. So definitely reach out. But even if we don't, when you reach out, typically we have some other accountants that we can refer you to as well. So definitely doesn't hurt to reach out with that if you are looking for any people that we have mentioned in this, any of the resources that we have looked for in this. But go back through, understand these videos, rewatch them if you need to. Hopefully this has laid a lot of it out for it. Reach out to me directly if you have questions, if something didn't make sense. Happy to talk with you and let you know more on it. But I appreciate you guys following along. Hopefully you've learned a lot and you now understand how you can use the short-term rental loophole to go through and build your real estate portfolio.